welcome in our next guest, Wayne Kaufman, Chief Market Analyst, Phoenix Financial Services. He's going to have stock picks for us. He's going to tell us how he's feeling about the market. So how are you thinking overall?
It's hard not to be bullish. Got a little bit of the market narrowing the last couple of weeks, and that's ahead of the typical seasonal week period of really September, but some August and September into October. But the big caps are the place to be. They continue to do fantastic. The AI trade it's just not slowing down. It may even be accelerating. And we're getting help from low energy prices. And stocks are making all-time highs, you know, the big indexes.
When you talk about the leadership narrowing, you know, we look at market breadth, and tech has always sort of been the leader, bringing us lately, has brought us up. Utilities did well too, but we always looked at tech because it has such high growth. Now, what are you looking for? You mentioned tech, right?
Tech, communications, which, you know, really used to be tech. Right. Utilities, you know, there's some utility stocks that have just been tremendous, and I think at this point everybody knows there's not enough energy, and that AI is a huge energy hog, and just the fact that around the world we're using more energy, and the building of utilities hasn't been what we need it to be just for population growth. So now you throw in the AI enormous appetite for energy, and these companies are doing very, very well.
I had a guest on who actually talked about, with the deregulation that's occurring, that energy and banks are probably a good way to go. What do you think of that?
That makes so much sense, but one of the things the last couple of days I've been disappointed in, the financial sector has actually pulled back. The big banks, you know, they kicked off earnings season, and we've had a fantastic earnings season. And they kicked off earnings season, and they did great.
Okay, so when we look at the energy situation, obviously you talked about AI and data centers and things like that. I want to get to your picks, which involve AI and tech. How about we start with the first one? What's the first pick?
Well, Dell would be one.
Yeah.
You know, they're just one of the leaders in AI servers, doing tremendous business there. They are obviously a leader in PCs, which PCs haven't been great, but there's probably going to be an upgrade cycle very soon. I know I need a new PC. And they also do consulting. You know, people don't realize that. They make a lot of money. They've got a free cash flow yield of 7%, a dividend yield of 1.5%. The market, the S&P free cash flow yield is about 3%. So, and the stock is breaking out to the highest level it's been since November. So I like Dell.
Dell's so different than Intel. I mean, we've had a lot of problems with Intel. So Dell is the winner. How about Taiwan Semi?
Taiwan Semi is an amazing company. Really has no competitors right now. They're the leader in manufacturing chips. So companies like AMD, Nvidia, really all the big guys send contracts to Taiwan Semi to manufacture. And it's very reasonably priced here. I think that that there's probably a discount for it based on people are worried that China might attack Taiwan. That's not going to happen. So, and they've got such a lead in the advanced nodes for making the smaller chips. And they're all booked up now, and that's without a really strong phone market. If Apple gets going with any kind of real upgrades on their phones over the next year or so, then it's going to create an even better environment for Taiwan Semi.
Yeah, and Seagate you have there, right?
Yeah, so, you know, we want to store everything, whether it's on our phones and then to the internet, all the video that's going on.
We're all hoarders.
We're all hoarders. Everything that takes place on the planet, we want to video or record and then store it. And they've got a new technology using a laser to heat up the hard disk to store even more data. And they make an enormous amount of money. Their free cash flow yield also above 6%. They pay a 2% dividend. And storage is really a great place to be with all the data.
And what about Alphabet Google?
I think that Google is, it's been unloved.
Yeah.
It's starting, since their earnings, to kick into high gear again. I think it's probably the cheapest of the Mag 7. And year two, when you look at the Mag 7, if you look at 4 or 5 of them anyway, the amount of money they spend on R&D and CapEx, and they still have unbelievable free cash flow left over. These companies are unassailable. And Google, I think, is the cheapest. It's got a PEG ratio, PE versus growth rate, of about 1. So it's very reasonable to me.
All right, it's at $200. How high? The high was 207. How high can it go?
I try not to pick where they might go, but I buy them and I own all of these, and I just think that they're going to go higher.
Sure.
So I think that over the next few years, a company like Google or Microsoft, Meta, Amazon, these companies, they're spending $100 billion a year on R&D and CapEx. You'd have to believe that the R&D expenditures were going to be wasted to have something against these companies and the moat that they've built around their businesses.
Should we get to gold and silver quickly? We're almost out of time.
Gold and silver are easy. They're breaking out. They're making highs. So the GDX is the ETF for companies. SIL is for the silver miners. And I think they're good for everybody to have some exposure there.
All right. Wayne Kaufman, great to see you, Chief Market Analyst at Phoenix Financial Services. Thank you so much, Wayne.
Thanks for having me.
In person, here he is. Thank you.